Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. On this blog, we try to take what's unnecessarily complicated out there in Wall Street and make it understandable to you on Main Street. Up 1.5% last week, off just 2% from an all-time high. And again, May was the best month since November of 2023. Up 20% from the low we just saw 2 short months ago. Jobs numbers came out last week as expected. As a matter of fact, even a little bit above expectations. Recession? What recession? And lastly, we went into the weekend with talks with China happening in London. Did anything happen? Did any positivity come out of that meeting? Did that positivity translate into another positive week in the market? Here's your week in review. A whole lot of nothing came out of those meetings in London, but the market didn't react negatively. The market was waiting for inflation news. The CPI, I stands for inflation, beating expectations 4 straight months, meaning that inflation is lower than expectations, gives the Fed coverage to start cutting interest rates. We believe that they start cutting interest rates in September, which puts more money in your pocket. We also warned you of geopolitical risk, especially with the market at near all-time highs. Well, that happened last night and this morning. Israel attacking Iran. Oil is now spiking, and you have less money in your pocket. And there is now a risk that this spreads beyond the Middle East. But even with that news, the market, at least at this point, is opening flat for the week. Now, here's what to look for next week. So we have the geopolitical risk. We have the political risk in D.C. Does the big, beautiful deal get passed? And get this, we're talking about a debt limit increase again. Needs to be done by the middle of July. And also the pause on tariffs. We haven't talked about that in this blog yet. That needs to get resolved by July 9th. With a market near an all-time high, I said this last week, it is best to be proactive. Use active investing versus passive. Be selective in the sectors and the positions that you own. And take this weekend as an opportunity to review your risk tolerance, your goals, your objectives, and act on it. And I haven't used this in a few weeks. Get your short-term money out of this market. Now, here's your personal finance tip of the week. Almost each and every week, I tell you to act on your portfolio before the market does it for you. Recently, one of our newest clients, the Flagship, came into us with a collection of investments. A 401k here, an IRA there, some fully invested, some 100% invested in the international market or the small company market. Again, take this weekend as an opportunity to review that. Consolidate these assets and have all the ships sailing in the same direction. So thanks again for checking in. We'll see you next week on the Captain's Blog.